As of the market close on Friday, December 5th, 2025, Strive Inc., trading under the ticker symbol ASST, finished the trading session at exactly $0.90 per share, marking a significant intraday decline of approximately 7.8%. While the broader indices were digesting mixed economic signals, this specific movement in Strive Inc. represents a level of volatility that far exceeds the typical behavior of a standard asset management firm. If you look at the tape, the stock opened higher, near $0.98, but faced immediate selling pressure, pushing it down to test the $0.88 support level before settling at 90 cents. This price action suggests a fierce battle between retail optimism surrounding its strategic pivot and institutional caution regarding its execution risks. Investors watching this chart are not just seeing a red day, they are witnessing the turbulent repricing of a company that is fundamentally altering its identity in real time. When most people hear the name Strive, the expectation is almost Pavlovian. They think of the anti-woke ETF issuer, the firm founded by Vivek Ramaswamy to challenge the ESG dominance of BlackRock and Vanguard. They expect a boring, fee-based business model that slowly gathers assets under management by appealing to conservative investors. That is the safe, comfortable narrative that has lived in the headlines for the last 3 years. The reality, however, is drastically different and far more explosive. Strive Inc. is no longer just an issuer of index funds. Through its 2025 merger with asset entities and its aggressive balance sheet restructuring, it is morphing into a leveraged Bitcoin Treasury vehicle. The market is not treating this as an ETF company anymore. It is treating it as a high-beta derivative on the future of digital assets, similar to the early days of MicroStrategy, but applied to the asset management sector. This disconnect between those who think they are buying a political statement and those who know they are buying a crypto treasury play is creating the massive volatility we are seeing on the screen today. Analyzing the recent market movement requires looking beyond the headline price. The 7.8% drop on Friday wasn't driven by a specific earnings miss or operational failure, but rather by the broader liquidity dynamics impacting small-cap, crypto-adjacent stocks. We are seeing a rotation, where capital is moving from high-risk speculative vehicles back into established megacaps like Tesla stock or NVIDIA stock, both of which have sucked considerable oxygen out of the room this week. For a company like Strive, which trades with a market cap around $730 million, this rotation can be brutal. The volume on Friday was elevated, over 110 million shares changing hands, indicating that this wasn't just a low-volume drift, it was a high-volume exit by short-term traders who likely bought the rumor of the Bitcoin acquisition announcements and are now selling the news. However, this selling pressure brings us to a critical technical juncture. The stock is hovering precariously close to the $1 psychological mark, and breaking below it, as it did on Friday, often triggers compliance warnings and algorithmic selling from passive funds that avoid penny stocks. This brings us to the mechanics of how investors are actually accessing this trade. Because Strive Inc. is trading under the $1 threshold, it falls into a unique category of risk and accessibility. If you are managing your own wealth through online investment platforms, you might notice different margin requirements for a stock like ASST compared to Apple stock. For instance, if you are using Robinhood for your Robinhood stock trading, the interface makes it incredibly easy to buy these shares, perhaps too easy for the uninitiated. The Robinhood app often gamifies these low-priced runners, and we are seeing significant retail chatter on Robinhood crypto forums discussing Strive not as a stock, but as a token-adjacent asset. The Robinhood cash management features allow traders to move liquidity quickly into these dips, which explains the rapid bounces we often see after a morning flush. However, the risks are magnified. Unlike Robinhood fractional shares, where you buy a slice of a stable giant, Buying whole shares of a sub-dollar stock exposes you to widening bid-ask spreads and liquidity gaps. On the flip side, more traditional investors using Fidelity are seeing a different picture. Fidelity Investments generally provides more rigorous research tools, and those using the Fidelity Trading Platform or the Fidelity mobile app might see alerts regarding the volatility of ASST. Fidelity brokerage accounts often restrict purchasing of sub-dollar stocks without limit orders, acting as a natural brake on the FOMO, fear of missing out, that drives stocks like this. If you're holding Strive Inc. in your Fidelity IRAs or utilizing Fidelity Wealth Management Services, your advisor is likely telling you to exercise extreme caution, viewing this not as a core holding but as a speculative satellite position. The contrast between the Robinhood Investments crowd and the Fidelity Mutual Funds crowd is stark here. One sees a lottery ticket to the moon based on Bitcoin adoption. The other sees a distressed asset attempting a risky pivot. The core of the Strive Inc. thesis in late 2025 revolves around its balance sheet strategy. Following its merger with asset entities, the company explicitly stated its intention to accumulate Bitcoin, aiming to outperform Bitcoin itself by leveraging its operating business to buy more coins, a strategy popularized by Michael Saylor. This is why the stock price is so sensitive to the intraday movements of crypto markets. When Bitcoin ticks down, Strive Inc. crashes harder because the market prices in the leverage risk. It's a high-stakes game of musical chairs. If Bitcoin appreciates, Strive's book value explodes, and the stock could theoretically multi-bagger from these levels. If Bitcoin enters a prolonged winter, the company's Treasury strategy could become an anchor that drags it into insolvency. This is not the Strive of 2022 that simply voted against ESG proposals. This is a financial engineering firm using the public markets to build a crypto war chest. For those looking for investment help or trying to figure out how to navigate this, the landscape of investing sites offers various tools. SoFi, for example, has been aggressive in courting younger investors who are comfortable with this hybrid model of equity and crypto exposure. SoFi Invest allows users to seamlessly switch between SoFi stocks and SoFi ETFs, and their social feed often highlights trending tickers like ASST. The SoFi trading platform and SoFi active investing tools are designed for the kind of user who wants to be hands-on with a volatile name like this. However, even a SoFi robo-advisor would likely underweight such a volatile asset in a balanced portfolio. The SoFi investing ethos encourages financial independence, but putting significant capital into a stock trading at $0.90 requires a stomach of steel. Let's pause on the technicals for a moment. The chart for ASST shows a series of lower highs over the last week, a bearish signal that suggests the pop from the IPO of its preferred stock, ticker SATA, is fading. The issuance of the preferred stock was a clever move, raising capital without immediately diluting the common shareholders too heavily. But the market is now wondering where that capital is going. Is it going to effective Bitcoin acquisition, or is it burning up in operational costs? The company's operational history is short and complex given the merger. We need to see stabilization in the daily trading volume. If volume dries up while the price is below $1, we could see a slow bleed. If volume spikes on an up day, it confirms that the bulls are defending the level. Now, I want you to take a moment and think about your own exposure to this sector. Comment below how many shares of Strive Inc. ASST you currently hold, or if you're playing this via the preferred stock SATA. Are you buying this for the political message or purely for the Bitcoin beta? Let me know in the comments section. Moving deeper into the analysis, we must consider the competitive landscape. Strive is trying to do something difficult, build an asset management brand, while simultaneously acting as a proprietary trading shop. Competitors like Schwab Intelligent Portfolios or Interactive Brokers are not playing this game. Interactive Brokers trading platforms are used by professionals who might be shorting ASST right now, betting that the pivot is a desperate Hail Mary. Interactive Brokers stock trading accounts offer deep liquidity and sophisticated shorting tools, and looking at the short interest data on Interactive Brokers platform, we can see that bets against Strive have been rising. The Interactive Brokers fee structure appeals to high-frequency traders who are likely scalping the volatility in ASST, buying at $0.89 and selling at $0.91 all day, creating the churn we see in the volume profile. Meanwhile, an Interactive Brokers account holder is looking at the fundamental metrics, price to book, earnings per share, which are negative, and seeing a class